Kennedy, thanks very much for taking the time to come down and see us today.
Thank you for the invitation.
We've had a kind of small switch in strategy for Standard Bank, moving from being a emerging market player to more focus on Africa. How's this affecting your approach to CIB in Africa?
Stephen, it's not so much a switch in strategy as it is really a refinement in line with the tough operating conditions worldwide. Standard Bank is celebrating 150 years of existence next year. We launched out from South Africa, and within the first 10 years of operations expanded into Africa. We saw the opportunity that is Africa, and that Africa is going to be core to what we are at Standard Bank back then. And what you're reflecting here is just a re-emphasis of that strategy. The amount of opportunities that Africa presents, the alignment, the emergence of Africa as a global force in the world, requires us to focus just about all of our energies in Africa, where we've got all of these things working in our favor.
When you talked about tough operating conditions worldwide, how about the conditions in Africa? How tough are they at the moment? And what are some of these opportunities you see on the continent?
Well, Africa is a massive opportunity. It's taken a while to get over, our history in the continent, to look at the strength, the opportunities around natural resources, the need to build infrastructure in the continent, and just even infrastructure to connect, the resource projects that are starting to emerge in the continent. However, the base is quite low. The markets aren't as developed as we are here in South Africa and elsewhere, and so the amount of work that needs to be done is significant. You have had a lot of my peers, both in the South African banking industry and elsewhere, announcing their own African strategy. Our experience in the continent suggests that you need to have local expertise, local operations, have local insights to be able to manage projects as major in resources and infrastructure as we have seen, to make it work. All of this, it takes time. You need to have deep pockets, and you need to have a bit of patience. And so we think that whilst competition is toughening in the continent, it's going to be interesting, and it can only be for the better going forward.
Is the main focus at this stage really still on natural resources and infrastructure within the continent? Are you seeing other opportunities outside of those spaces? Those
sectors are key for Africa. They are not just standalone, as I've indicated. Quite a lot of the infrastructure build is about connecting, access for the resource, for mining, for similar type of resource leveraging in the continent. But you're also seeing quite a lot happening in the telecom sector. You're seeing some interesting changes with respect to how governments in the continent, as we're seeing here in South Africa, gain confidence with private-public sector partnerships that open other small, locally based sectors as well as an opportunity in the continent.
Are you seeing any pickup in activity? Are we back at those pre-financial crisis levels yet with activity for CIB in Africa?
Well, I look after CIB in South Africa. It is a significant contributor to what we do in the continent. South African corporates, South Africa as a country is the 6th largest investor in Africa. We've got quite a number of South African mining companies, fast-moving goods sector, telecoms, etc., going into the continent. Activity is rising. Not quite back to the pre-global financial crisis kind of levels of activity and deal execution, but really positive momentum in 2011 that we look to continue to work on.
Of course, you said you have to have deep pockets for these markets. Are your pockets deep enough? Do you have the funding for the opportunities that are out there?
Look, the story of Africa is no longer just about the resources that Africa itself has, but it's also about tapping the opportunity that BRICS present, the new pools of capital and resources that are in Brazil, Russia, India, China, looking for the opportunity in Africa. And also, of course, pools of capital in the developed world, looking for yield, looking for long-term investment in the continent. Our role as CIB in South Africa and in Africa is to harness those pools of resources for these opportunities. There are some attractive investment opportunities here, and we think investors in South Africa, investors in BRIC countries and elsewhere have got to look carefully at not missing these opportunities by. Our role is to put all of this together.
Well, perhaps as a precursor to South Africa joining the BRICS grouping, we had Standard Bank linking up with ICBC a number of years ago. It's a large shareholder in Standard Bank. What sort of advantage has that been for Standard Bank in moving into Africa?
Massive advantages, Stephen. As I indicated, the whole concept of indigenous capital, which we should celebrate on a day like this, an Africa Day, it was great. As you know, it spoke about Africa helping itself, backing itself to invest in its own projects. But the opportunity in Africa is large, and you need much deeper pools of resources. Standard Bank's partnership with the largest bank in China and by market cap the largest bank in the world enables us to really have access to the China Inc. pools of resources via ICBC and other Africa-focused projects from ICBC. We have a natural advantage then with this ICBC tie-up to do deals such as the Morupule new power generation deal in Botswana, or to support what we're trying to do in telecoms, or in Nigeria, what we're doing in Angola with the beverages and fast-moving company deals that are on the way right now. We could not do this without a tie-up with a bigger player in the world stage, such as ICBC, which galvanizes these pools of resources from the second largest economy in the world today.
How about some of the risks, though, just in closing, and regulations, because you're operating in a number of different regulatory environments. We do have changing capital requirements coming in for South Africa, but for countries across the board. How do you manage those risks?
I think Basel III is coming down the way. It's going to impact how we deploy capital, how we have got to manage liquidity in South Africa. It's something that we've got to deal with. Hey? I do, however, think that there is a maturity in the regulatory framework in South Africa around the role that the South African banks can play in the continent, an enabling role to create that financial services hub for the continent. And I do think that we're going to find our way into a win-win situation with respect to those regulations for us to be able to play a natural role in the continent.